Okay, recording this video. It is Sunday, 23rd of August 2015, and what a week. I do hope you traded it well. We're down 10% on most of the indices, about down 7.5% on the S&P 500, and what a couple of days trading. First thing to say is I've got to thank everybody for not emailing me and saying, what the hell, you said the market was going up. And I refer you to this last video I did on the 12th of August, talking about professional blue spiky bars, where we have a shakeout and we were potentially going to new highs. And that didn't work out, and basically everything changed on FOMC day on Wednesday of this week. So I'm just going to show you what we've had over the last few days. This was the big blue professional spiky bar that we had in that video I was referring to, and normally kind of bars like that show that the professionals were buying it up, this kind of big dip. We had big volume on that day, they bought it up. But, you know, it's got to keep going, and saying the 2100 number was absolutely key to get above that, to get kind of confirmation. And what we had in the meantime was some very weak activity. Amateur up bars, amateur bar kind of breaking to new highs or a little high above this 2100 number, and then this is the day. This was the Wednesday, the FOMC day kind of came in, and you could see that that changed everybody's minds, and we had a sell-off from there. And as soon as the low of this blue professional spiky bar is taken out, it's game over. It's like, you know, the setup has failed and we're going the other way, and what we had is a really big kind of collapse in the opposite direction. So, you know, these patterns don't always work to the good. When they fail, that's the signal for a fail. You know, closing below that, getting through that low means all of a sudden, you know, change in tune. So let's just go through and just show you this activity on a bunch of the indices charts, because this amateur activity kind of breaking up was visible on all of them, with bearish divergence kind of rolling over. So I'm just going to show you those daily indices charts. This is the Dow, and you can see here, bang, 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 amateur up bars into that little retrace there. That shows that's weak activity. You know, a little bearish divergence, very little buying kind of going on, and then bang bang, we just kind of collapse on the way down. This is the S&P 5. This is the Russell 2000. You know, up just one little amateur up bar, a little bit stronger than the others, but then it failed through those lows. Bang. S&P 500. There we go on the indices chart as opposed to the futures chart. Amateur bar, amateur up bar, amateur up bar. It's really weak, and then it rolls. And then lastly, the Nasdaq. Same deal, kind of little amateur up bar, up there. So that little wedging pattern with amateur up bars into those highs was just not working out. We didn't have, you know, real kind of strong buying taking us through that in order to break to new highs and so on, and it failed. And it failed when that FOMC news kind of came out. I'll show you that on the long-term chart in a second. But as soon as we were through critical supports and we got a triple break, that's why this kind of trend move to the downside broke so hard. So you can see this is the 45-minute chart, the 135-minute chart. There are 3 of these bars exactly in the day session of the E-mini, and then the daily chart here. And you can see this support level here was at 66.25, and it was exactly the same here, 66.25 on the 135-minute chart. When you get a double break like this at the same time, you know that's going to be a strong move, because we got to go end of trend on the next this 135-minute time frame chart. And then as soon as we were breaking through, you know, 46.25, we got a triple break on our hands here. So this is a really big move, and as soon as that was taken out, bang, game over. We're going the other way into a trend move on the way down. So and on the way down, what we got to see before this is all over, we got some nice exhaustion patterns. The selling's been pretty severe, but we got to see pullback, end of trend, ripple through on the 45-minute, 135-minute, and maybe on the daily as well. And I've got a little bit of a ways to go. This is the intraday chart. Let me just show you this one first on the 40,500 tip bar chart, which is very similar to a 45-minute chart here. And you can see this was FOMC day. So Friday's activity, Thursday's activity, Wednesday's activity. This is the FOMC news gets broken, the notes are out. And this is the difference in what's going on with the professionals after that. We have exhaustion buy, bearish divergence. When the bearish divergence is right on the zero line, wait for a flush pattern here right on that retrace, bang, leading to that break in the downtrend. Now, the difference in character between this activity and what happened here was, look for the blue professional bars. Blue professional bars are buying the little dip here, and we have a little race away here. They're buying that little dip on the way here. We race away to the highs. This one down here, really nice buying on that flush pattern, buying that little down activity, that dip, bang, race away. Even here, you'd say is buying that little dip there. But on this move here, on that FOMC day, note we have no blue professional bars. That little dip there, no blue professional bars. Instead, what they're doing is they're selling the retrace here. So as that retrace kind of comes in, you can see blue professional up bars, bang, we head down. We come down to this little local low, no blue professional bars stepping in here. And then as soon as we're getting through 2040, there, we've got a blue professional bar selling the lows, and that's like falling through the ice type pattern. So now we've had some blue professional bars buying a little dip here, buying this dip here, but that's the critical one. On that FOMC day, they weren't buying those lows, they were selling those highs. That little retrace, they were selling it down. So that's an important kind of pattern to note. And then just like the 45-minute chart, we're through a critical support on the 40,500 tip bar chart. This has got to go pull back end of trend. So we'll wait and see. We've not had an exhaustion sell to mirror this exhaustion buy. So let's look out for Monday into Tuesday, see what happens if we get really an extreme type selling that mirrors that extreme type buy in there. And we'll see if we get that exhaustion sell on the left shoulder in order to bottom this move for the time being. But that was the critical thing. Through support, ended up through the daily support as well. We're going to have to go pull back end of trend, probably on the 135-minute chart at least. So let's see for where those patterns kind of pop up. Then on the other kind of interesting charts, here's the trend line chart. I was talking about the apex of this over the last few days. I've said, we've got the closer we get to an apex like that, the bigger the kind of trend line break is going to be. And then we got this false break here, and then all of a sudden we're back with a white bar into congestion between rising and falling trend lines. Bang, we're through this trend line, through the trend line again, into a nice big kind of trending move on the way down. So I'm sorry I hadn't had any videos up in the last couple of weeks, particularly after that FOMC there. That was kind of critical. Not been trading much over the last 3 weeks, but I did trade it Thursday and Friday. Got some good points earned on Friday. Thursday I got out way too early on a pre-open trade, and the big activity happened after the market was open and I wasn't actually trading it. And to refer to the commitment of traders charts that I've not talked about in a long time, not sure if this kind of counts, but we did have a crash warning indicator go off a fair few weeks ago now on the commitment of traders data. And what we've had since then is a whole bunch of bearish divergence patterns on the commitment of traders oscillators here. And then for this to signal actually a correction, we've got to go 10% down on the S&P, and that's about 1913 on this SP chart that I'm using here for commitment of traders, which would signal a kind of confirmation of that correction on the way down there. We've had a whole bunch of false warning signals over this time. This one was only a 9.8% correction, but I kind of count that as a winner because we got so close to 10. And it's interesting, on the other indices, on the Russell, on the Dow, and on the Nasdaq, we've had 10% move down, but S&P has only been 7.5% on the way down there. So looking forward to that kind of getting a confirmation that it was a crash warning indicator. But it was a fair few weeks ago. Now, before going on to the day trading charts, I'm just going to look at the FX charts, because I said in the last video that I was changing my tune on Forex because we'd had some weakness in the dollar index, and I was changing from a bullish view to a bearish view on dollar index, and we've had basically confirmation of that kind of over the last 3 or 4 days. So here's the dollar index on a daily chart, pullback, end of trend, exhaustion buy kind of going on here, and then we test into this point here, get our bearish divergence up here, and then we've just been playing around. Said the range of this big spiky blue professional bar was absolutely key. We bounced off the lows of that back into the zone here. We had a Rambo pattern, and then things were looking good after this blue professional spiky bar. Then we had this one breaking through the lows of that one. We came up to the top of this big blue professional bar, testing back up into that kind of zone, amateur up bar there, and now we've had a break and a close through support here. We're into a trending move on the daily chart. I still think there's some strength in the dollar index longer term to kind of come out, but in the mean term, we're going to go through pullback end of trend, a trending move on the daily charts here on the dollar index. And so some of the other forex contracts that are doing quite well against that is see the Japanese yen kind of first of all here, pullback, dirty end of trend, these blue professional bars at these lows, can't get through this kind of 80 number here, and now we've broken up. We've got support, we've got resistance to get through kind of first to go off on this pattern, and then breaking through resistance will show a trend move on the yen, but the yen is strong at the moment. And here's the euro. Euro having had pullback end of trend flush, and then we're in this big kind of zone here, rainbow patterns at the bottom, blue professional bar comes in, we come back, test the lows of that zone, and now we're through resistance, we're onto a trend move on the euro on the way up. Again, saying that, you know, the euro, we've got to get into some kind of zone and have another test back down. But for the time being, what we're doing on the daily charts on the dollar index and the euro is we're going for a pullback to end of trend move, and we'll have to see what happens after that. Interestingly, the pound, which has been kind of the strongest of the lot, I've been talking about that over the last several months, we're still sitting underneath that resistance here, waiting for that trending break on the pound. So it's interesting that's not happened. I said the other day, this little wedging pattern here with blue professional bars kind of tight, close together, and then they hold, and we start breaking up above the highs of that. That's showing the professionals buying that little dip. But I'm surprised, you know, with the strength that we had in those other forex contracts, that we've not had that breakthrough resistance on the British pound. And then the commodity currencies, the Aussie dollar and the Canadian, are still fairly weak. We're not getting kind of breaks, but they'll hold up a little bit, I'd have thought, given that, you know, the dollar index is going to be kind of weakening. So at some point this is going to show some strength and maybe start breaking through resistance to a trend move. And then the Canadian dollar, you know, we're still through support at this point here, but we've had our exhaustion sell, bullish divergence, and so on. So these have been the slowest to move because they're commodity currencies. The euro's been the strongest, and the Japanese yen at the moment. So we've got kind of funds flowing out of the US into Europe, maybe out of carry trades, repatriating money back into the Japanese yen. So that's kind of the way that's kind of going at the moment. So then lastly, just talking about day trades and the E-mini charts. A couple of things to note. When we get double and triple breaks, those are really important. They kind of end up being really kind of nice kind of trending moves. We had a really nice one setting up into Thursday's trade and then throughout Thursday's trade. So let's talk about the open on Friday, because there's an important kind of rule of thumb. Obviously Thursday we had a big kind of down day. Exhaustion sell patterns all the way down. You know, we were going into a big pullback to end of trend pattern on the 4500 tip bar chart. But after a big down day, I always say expect there to be continuation and follow through in the next morning's open, because, you know, all the amateurs are looking at their charts because they've got day jobs. You know, in the evenings they're looking at their charts and they're putting in their orders in the morning, and they're kind of usually momentum type trades. So they're kind of based on the weakness that we saw on the Thursday's activity. So you're always going to get a little bit of weakness coming into the open on Friday. And if you're going to get a reversal day, the downtrend move that we get a continuation of from the next day is not over until we at least see exhaustion sell on the downside. So on Friday's activity, you know, we started off kind of continued selling. We'd had exhaustion sell pre-open going on here with a little bit of kind of news releases kind of going on, but the downtrend was not over until we at least saw an exhaustion sell on the downside. So what I was waiting for was an opportunity to go short into this move. We had, you know, a little bit of an opportunity here to kind of head down, but this was the really nice pattern. This was pullback. This was a Rambo pattern into resistance. Actually happened to be a nice resistance pattern on the 4500 tip bar chart here with a Rambo pattern at the highs. And then as soon as this support level was broken on the 45 at this level here, which was 1250, which is also around here, there we go at 14, those two levels being broken almost kind of simultaneously, we know we had a really nice kind of strong trending move on the way down, which ended up being a whole bunch of pullback to end of trends all the way down on 1500 kind of tip bar chart. But wait for that. We know that, you know, this is a false move on the way up. Here you can see the amateurs getting short here and getting short here. They get wrong-footed because we've got professional money kind of going short at this point here, kind of goes the other way, goes a little bit further, more professionals kind of selling it down and selling it down here, getting short on that little retrace there all the way down. But that move is not a change in trend, because we've got to see exhaustion sell first. So we've got to see this pattern on the 1500 before this is all over. And then, you know, on the 4500 tip bar chart, you know, it was just all the way down until we started to see pullback to dirty end of trend here, and then it just kept on collapsing throughout the day till pullback to end of trend exhaustion patterns. No reason to be reversing and going short around here. That was just, you know, here's 11 a.m. in the morning. Maybe this is starting to show a bottom, but we need to see at least a pullback to end of trend for this trending move to be over. And so that pullback to end of trend move, this thing didn't happen until midday, so we know that we've not had a reversal day. We're breaking to new lows at this point here. No reason to be going long at any point here. It's just a question of kind of picking the trades to kind of go short. So as I said, Thursday I just put in one trade before the open. It was a nice kind of double break. I only picked up 3 points for a pre-open trade. Of course, Thursday ended up being a monster day, and then Friday was another kind of big day, so I decided to trade most of Friday, the first hour and a half or so, and picked up some good points on the way down. Might add one of those trades to this video so you can see what was kind of going on. So there we go. Again, thank you to everybody not emailing me saying what the hell, but things did change after that FOMC announcement, and as soon as this thing changes its tune in terms of a signal, a blue professional spiky bar, the lows of that kind of being taken out, even this blue professional bars and the lows of that being taken out, it's all in jeopardy. That's what we had, big kind of change in trend. So I do hope you traded it well. Big days like Thursday and Friday, great opportunities to pick up kind of big points, and did get a couple of emails, people saying they traded it well, which is good news. Let's see how Monday and Tuesday kind of work out. We've got these kind of major breaks, so we're looking for the downtrend's not over until pull back to end of trend on the 135-minute chart, I would have thought, at the very least. So let's see where it goes from here. Just reverse, gone short 12.25, short 12.25. Checking the stops and targets, and that is a real shame. Loss of 3 on that last long trade. But the reason for getting short, we just are playing around with these supports and breaking through them, just not holding. We didn't bounce off this nicely. So this little blue professional spiky up bar, all of a sudden we just went through the lows of that really quick. So we got another support here. So we got triple happening here. Support. So maybe, in terms of exhaustion patterns, maybe we're going to get our exhaustion pattern during the full liquidity of the day, rather than this one at the beginning of the day. Breaking this into a pullback to end of trend situation and a big reading on the way down. So all of a sudden, if we start, coming through this kind of channel, all of a sudden, we'll realize we're looking for like 8s and 9s and 7s. All of a sudden the energy will just flow through, led by the emitters. That's okay. Well, move my target out to 6.25, and the reason for doing that is the kind of key numbers. It's like a 9, the low here, and then this is 7.5. So what I'm hoping for is us to snap back through the 7.5, get that exhaustion pattern, and try and get down to 6.25. If it does break something like that, it's an easy number that we'd kind of take out, but we've got to get there first. But we pull back to end of trend. We've got a triple break, support, and with minus 5,000, this will probably go for like an 8,000. Although I think this was 10. So let's hold on. Alright, here we go. We're at 7.5. I'm looking for 6.25. Here it's bursting. Bingo! Taken out. 6.25. Excellent for another 6. Awesome. And that exhaustion pattern kind of came in here. We got touched at 6.25 here. I didn't get taken out, so had to wait for this little pattern. Still got to go pull back end of trend on 515. Who knows? Whoa. So there we go. I'm definitely done for the day.